Hello, everybody. It's Zach here from RealEstateLicenseWizard.com. Today, we're talking about the Subordination Clause, also known as the Subordinate Clause. Subordination in real estate, finance, and banking refers to the order of priorities and claims for ownership or assets. Subordination Clause is the legal agreement which establishes the order of priorities in the form of a clause within a contract. But more on that later. As always, in this video, we're going to talk about the definition, how it deals with real estate, and what to remember for the real estate exam. But before we define the clause today, I just want to make sure you understand what a clause is. For those who don't know, a clause just identifies a particular section of a real estate contract. In real estate, there are many different types of clauses, so it's super important that you understand them and are able to distinguish which is which, not only for your career, but for the exam too. So let's define the clause we're talking about today, the subordination clause. So the subordination clause in real estate establishes order of priorities of financial claims. Think liens, for those of you guys in lien theory states. So, what does that mean? Well, the subordination clause effectively makes the current claim number one to any existing claims that have already been recorded. Usually, financial claims or liens have some form of order. Think about it. If a house forecloses, there has to be a system in place for applicable parties to get paid. Or else, how would anyone understand who gets paid first? Well, that's exactly what the subordination clause does. It establishes a ranking system against the property. To adjust the priority of a claim, a lender usually requires a subordination clause. Now, a subordination clause is meant to protect the interests of the primary lender. A primary mortgage usually covers the cost of purchasing a home. However, if there's a secondary mortgage, the clause ensures the primary lender retains number one priority. In other words, the primary lender's claim will supersede any other financial claims. Now, subordination clauses are commonly used when a home is refinanced. Refinancing results in the original home loan being paid off and a newer loan with different interest rates being established. That theoretically would put the new lender at the end of the priority list, but mortgage lenders require loans to be first in line. So, in order to refinance a home, other claim holders have to agree before refinancing can begin. Now, there are some exceptions to some circumstances where people or organizations are not going to accept the subordination clause. For example, obviously, some financial claims or liens can't be reordered, and the applicable parties are not going to agree. For example, if a homeowner doesn't pay their taxes, the IRS may put an involuntary lien on the property. If later on the homeowner tries to refinance, that decision will ultimately be up to the IRS. They could say yes, but again, ultimately, it's up to them. So, what do you need to know for the real estate exam? Well, like other clauses for the exam, you need to remember exactly what the subordination clause is. Question on the exam, you might see it's a bunch of different clauses or definitions, and you have to understand which is which or which is applicable where. But yeah, that's pretty much everything about the subordination clause. This video is part of our Answering Real Estate Exam series, where we go over specific vocab topics for the real estate exam. Please check out the rest of those videos so you are as prepared as possible. We also have videos in this series that cover other contract clauses. Ensure you check those out as well. If you do have any other questions, comments, please leave them down below. Don't forget to like and subscribe for more real estate exam related stuff. Thank you guys so much for watching. As always, I'm Zachary Smiggle from RealEstateLicenseWizard.com. Make today magical.